Most Indians believe real estate is the ultimate way to build wealth. But what if I told you that 1 lakh invested in the stock market could grow to 5.89 crore while the same in real estate might fetch just 1 crore? Let's break down the truth beyond the hype in this video. Hi, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. We get it. Real estate feels safe. It's tangible, it appreciates over time, and hey, you can even earn rental income. But here's the problem. When you account for costs like stamp duty, registration, maintenance, and property tax, your actual returns not as high as they seem. And let's say someone bought a property for 1 lakh in 1979. Today it's worth 1 crore. Sounds amazing, right? But the annualized return is just 11.3%, and that's before deducting hidden cost. Suddenly, the dream return doesn't look so dreamy anymore. So that same 1 lakh invested in the BSE Sensex in 1979 would have grown to 5.89 crore by 2023. That's an annualized return of 15.3% thanks to the power of compounding. The stock market rewards long-term patience quietly and consistently. But if you don't want to pick stocks, no problem. Equity mutual funds have delivered 18 to 21% of annualized returns over the last few decades. They are professionally managed, diversified, and perfect for passive investors. And now let's do a quick comparison between real estate versus equity mutual funds. So in terms of liquidity, real estate has low liquidity whereas equity has high. And in terms of entry or exit cost, it is high in real estate, but in equity mutual funds, it is low. And in terms of diversification, there is a limited diversification within real estate, but in equity mutual funds there is high potential for diversification. And in terms of passive income, so in real estate you can get passive income through rental, and while you can get through dividends in equity mutual funds. And in terms of compounding, it is low in real estate while it is high in equity mutual funds. And in terms of effort, real estate needs a lots of effort. But in equity mutual fund, you need to put only a little amount of effort. So ask yourself, do you want a fixed building or a growing portfolio? Now let's be fair, real estate isn't all bad. It can be a smart choice when you want passive rental income, you're investing in a high growth city or area, or you can qualify for tax breaks or housing subsidies, and when you want to diversify with a tangible asset. But remember, it should complement your investments, not replace them. So is real estate really safer than stocks? This is one of the most common myths. Sure, real estate feels stable. It doesn't move up and down every day like the stock market, but that doesn't make it safer. Property prices can stagnate for years, and selling a house quickly, that's not so easy. And for emergencies, your money is locked. So compare that to equity. Yes, it is volatile, but long term it has proven to outperform, and it's liquid, so you can exit anytime. And with smart diversification, the risk can be managed. So real estate is stable but slow. Stocks, they are volatile but rewarding. So should you choose real estate or equity? Here's the honest answer. It depends on you. If you want high returns, flexibility, and zero maintenance, equity mutual funds and stocks win hands down. But if your goal is stability, rental income, or fulfilling a dream home plan, real estate still holds value. So the best approach, diversify. Build a balanced portfolio that includes both based on your goals and timeline. If you're still confused, that's totally normal. So here's how a certified financial planner can help. They will understand your goals and risk profile and design a personalized asset allocation strategy based on that. So they will help you pick the right mutual funds or properties and review and rebalance your investments regularly, making your investment journey hassle-free for you. So it's like having Google Maps for your financial journey, showing you the fastest, safest route to your destination. So what is the final takeaway from this video? Who wins? Real estate or stocks? Real estate and equity both have their roles, but when it comes to long-term wealth creation, the stock market takes the crown. thanks to compounding liquidity and lower cost. So instead of betting everything on property, let your money grow smarter. Click the link in the description to book your free consultation with a certified financial planner. Let's build a portfolio that creates wealth, not just walls. So like, share and subscribe if you find this video eye-opening. So thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.